Thanks for tuning in. This is the Lifelong Miner, and let's check out week 132 of my mining payouts. Okay, so at the beginning of these payout videos, let's go over the date and time when I took these payouts. Today is January 24th of 2022, and it's about 11 p.m. US Eastern Time. And I do want to mention that I'll go over my electricity bill and my YouTube and Twitch profits at the end of the month. So as of right now, the price of Ethereum is at $2,450.05. The price of Monero is at $145.13. And the price of Chia is at $77.21. And as of right now, the average difficulty is at 12,448.274 terahashes. And it looks like we're earning around 2.2 ETH per block. So like previous weeks, I've been mining Ethereum and I do average around 3.3 gigahashes mining Ethereum. I've been also mining Monero and I do average around 20 kilohashes. And I also been farming Chia and I do have 782 plots. So pulling up my cell and checking out what I mine, I did mine around 0.46 Ethereum, equaling around $1,106.86, about 0.02 Monero, equaling around $2.88, and about 0.17 Chia, equaling around $12.95. So if I did sell everything as of today, I would have made $1,109.74. And checking out my GPU count, I do have a total of 75 GPUs and 2 CPUs. My GPUs are mining Ethereum, my CPU is mining Monero, and I do have hard drives farming Chia. Okay, so for this week's fun clip, I did find 2 news clips on Bitcoin, so let's check this out.
You can learn something about the current meltdown by looking at the decline in Bitcoin from April to June of last year, okay? This collapse was as severe as the 1929 stock market crash. We're talking something losing more than half of its value in a matter of 8 to 10 weeks. Sometimes this kind of breakdown can cause structural damage to a given market, resulting in a labored recovery that might not erase more than 50 to 60% of the losses before the decline resumes all over again. However, Bitcoin was the exception. It quickly rebounded off its lows from last summer and snapped right back, hitting a new all-time high in the fall. Will you look at that? Nice comeback. After that extended rally, though, DeMarc's model turned negative again, this time in November, another trend exhaustion top. Since then, we have seen a hideous meltdown in all things crypto. At this point, the latest Bitcoin sell-off is almost as bad as what we saw last spring. It's down roughly 50% over 50 trading days. Once again, DeMarc says there's a possibility of long-term structural damage to the whole crypto space, which could translate into a feeble rebound whenever this thing stops going down. But DeMarc's betting that won't happen. Let's zoom in on the 7-day chart of Bitcoin. Remember, DeMarc has a 13-session countdown pattern that tells him when a rally or a decline is likely to exhaust itself. Right now, Bitcoin's currently at 11. Okay, the sell-off is 11 on the buy countdown. We need 2 more negative closes before his buy trigger fires. Now, DeMarc also wants to see Bitcoin testing his downside price targets. It briefly broke down below his higher target at 34,495 earlier today, before rebounding off its lows. However, if this rally proves to be short-lived, then DeMarc wouldn't be surprised to see Bitcoin getting hit with a 2 or 3 day panic selling climax, which could take it all the way down to 26,355. Who wouldn't want to buy it there? To put this in historical perspective, during the last big meltdown from April of last year to late June, Bitcoin lost nearly 56% of its value. Take a look at this comparative chart. If we get a similar percentage size decline from this November highs here, then you'd expect Bitcoin to bottom at around 30,557. DeMarc also notes that Bitcoin's angle of descent last April, got that? The degree of the decline is identical to its current angle of descent. In other words, there's a good chance that history continues to repeat itself.
What have you seen with the levels? People were saying, okay, if it falls below 40,000, that's a concern. If it falls below 35,000, that's a concern. Where are the real lines?
It's definitely a pivotal week for Bitcoin and really the major indices on the equity front as well. The volatility has been real, as you would imagine. I mean, it's really been wild. You can see it in the volatility index or the VIX spiking this week or the past 2 weeks or so. And so for Bitcoin, this 50% downdraft has brought it into what I see as key support. This is around 37,400. It's based on something called the cloud model, and it's a very popular technical model for all currencies, including cryptocurrencies. This level in my work defines the long-term uptrend. So a breach of it, that's decisive. And for me, that means a couple of weekly closes below. We got one last week, so that leaves a breakdown pending confirmation this Friday. That would effectively reverse the long-term uptrend. At the same time, we have a very significant loss of long-term momentum. You can see that in something called the monthly MACD indicator, another very popular tool that has been positive up until this month for Bitcoin since June of 2020. And of course, Bitcoin then was below 10,000. So it's a very significant shift. There are a lot of indications, broadly speaking, for Bitcoin and other risk assets that we should see more of a near-term bounce. And that could certainly help it avoid a breakdown, but it's really hard to picture a market in which equities are trending lower and Bitcoin is doing well.
What happens if Bitcoin does close this week above 37,400, that line that you just suggested is so important?
It essentially preserves the long-term uptrend. So we've had a bearish intermediate-term bias within the context of this long-term uptrend. It does preserve it. It doesn't minimize the loss of long-term momentum. And that's something that's really a problem for the markets in general right now. We're making comparisons to early 2018 as it pertains to the S&P 500 and also the NASDAQ 100, to which now Bitcoin has a much greater correlation with their downdraft year to date as compared to last year. So I think all these risk assets are becoming correlated because of the downdraft in part, where folks in general are penalizing risk assets. So I do see some similarities in the charts. The indicators are showing these downturns that tell us that we might be getting into more of a range-bound environment like we saw in 2018. If you recall, the S&P lost about 12% in that first quarter, rebounded by about 15%, and then we had that nasty downdraft towards year end of about 20%. And at the end of the year, there was really not much progress at all. So it really dictates this intermediate term outlook if you want to beat the benchmarks.
Maybe we should look at some of those charts exactly, because if this is so much more important, this is a bigger issue that we're following. If you look at the S&P 500, and we're looking just for the end of the week, where would you be looking for things to shore up? I mean, yesterday changed all the dynamics for the S&P 500, for the NASDAQ, for so many of the major averages and beyond. Right now, you're looking at the S&P at 4,410. What needs to happen here?
So for the S&P 500 and NASDAQ 100, the damage is really already done from a technical perspective. Those breakdowns, while they're only short-term in nature, they've already been confirmed. The market internal measures, things like breadth, leadership, sentiment, they're all very oversold here and do support a few days of strength. But we're recommending to our subscribers that they use that to reduce exposure, to increase hedges, which we've already been recommending. And that's to avoid this kind of 2018 early year corrective phase, after which we'll be looking for more indications from our intermediate term indicators. So right now we have short-term indications, including for Bitcoin, but what we want to see to signify an end to the corrective phase is something a bit more out of our intermediate term gauges. And unfortunately, even a very strong relief rally for the NASDAQ 100, for one, wouldn't fix the damage that's been done. There's about 3.5% room right now to the 200-day moving average that we could certainly see in terms of a magnitude for the bounce. And I think a lot of people would welcome that as they watch these mega caps just go against them and underperform.
Alright, so thanks for checking out this week's mining payout. Stay tuned for next week's as well. And shout out to this week's random comment winner. And if you didn't want to be featured, just write a comment below. And if you have any questions you want to ask me live, I do stream live on Twitch at twitch.tv/thelifeofminer every Sunday, 4:30 p.m. US Eastern Time. And if you do need any type of help, definitely join the Discord. I or someone will definitely help you out. Okay, so hope you enjoyed this video. Thumbs if you enjoyed it, sub if you're excited to see what's next. But of course, thanks for watching, and always, happy mining.
Thanks for watching The Life of a Miner. This is Gohan from Dragon Ball Z. You don't want me to get angry and turn Super Saiyan, so make sure you subscribe to The Life of a Miner. I'm also the narrator. Next time on The Life of a Miner.